think of the world that's coming as something like that, where it's possible to invest very successfully in a world that's chaotic because crisis equals opportunities. And we've got a lot of crises coming. So we have a lot of big opportunities too. And then think, what exactly would you do about these crises here?
John Rubino, how you doing?
Hey, Andy, it's great to meet you.
It's great to meet you, and I've been a long time fan and admirer, and it's great to finally have you on. What I really enjoy about you in your work and your writings is that you're very, very broad, you start very macro, and then you bring it down to a micro level with a lot of different things. And specifically, I like that you start with the economics, if you would. So a lot of economic news has been hitting recently. And let's talk about that. The Fed came in, well, the CPI report came out really hot today. And really since, I would say December of last year, or early in the year, the Fed's been talking on both sides of their mouths, but somewhat dovish. And that's really ignited the metals, which have just broken out. So start talking to me about that. What's going on?
Okay, yeah, broad brush. The global financial system is irreparably broken. It's going to have to crash. We're going to have to replace it with something else. But in the meantime, central banks have a real dilemma because, for instance, in the U.S. with the Fed, they massively increased the money supply. They got inflation from that, and they're desperately hoping that that inflation dies down so they can cut interest rates because rates are high enough now to start breaking lots of different things out there. Fed knows that, and the Fed is also aware that it's an election year. And the guys who control their social futures, if they want to be able to, be invited to dinner parties in DC going forward, they need to be cutting rates aggressively going into this election to get the incumbents reelected. They know all this, but they've got a tiger by the tail now because inflation is not going away. They thought it would, and I kind of did too. With interest rates this high, I thought we'd have all kinds of different sectors breaking out there, which would be very deflationary, but not yet. And so the Fed is sitting there not really knowing what to do because they want to cut, but inflation keeps coming in a little higher than their target. And right now, I think core inflation is twice their target. It's like 4%, which is way too high. That is a crisis
Double.
level. Yeah, that's a crisis inflation level. And they should be tightening in the face of 4% inflation, but they know they can't do that. So they're just panicked right now, and they don't want to show that, but behind closed doors, I'm sure they're just freaking out right now. And it's fairly clear where this goes now because interest rates are back up. The 10-year Treasury yield is back up to 4.5%. It was down as low as 3.8% for a while. Now it's back up to levels at which mortgage rates are 7.5 or 8%, and car loans are 10% to 15%, unless you have perfect credit. And even then it's 8%. Loans are very expensive now. Money's very expensive. It's hard to be a debtor, and yet everybody's a debtor. So there's a crisis coming out there, and the Fed knows it, and they really don't know what to do. So it's an interesting time, and it's hard to feel sympathetic for the guys who caused this mess, that they are going to have to preside over the collapse of the mess. But that's the year ahead for us, basically.
Yeah. So right now, really has moment be because last year in about this time in 2023, we started having these regional bank failures, and they pulled a lever, or when I say they, the Fed or the Treasury, they pulled some levers and more or less saved a bunch of banks. So some banks went under, but they started saving banks. Are we in for that at 2.0 here coming up with, and I give an example, this is very anecdotal. We have some good friends that they wanted to upgrade their house, and they went through that process, and their mortgage with taxes was about $2,000 a month. With current interest rates, it's over double. So obviously they didn't buy the house. So it seems to me that is indicative of the entire, really the homeowners real estate market and commercial real estate market. So yeah, let's talk about that. Is this 2.0 of what we saw last year?
Very possibly, but on steroids. It could be much worse than the last time. That was just a few banks. They were decent sized banks,
Yeah.
but there were just a few of them. And there's what 3,000 local and regional banks out there. And the biggest part of their asset base is twofold. One is government bonds, which trade inversely with interest rates, which means the book value of those bonds has gone way down again lately. And it hasn't been reported in the sense of the banks having to show it on their income statement yet. And then they also have a lot of commercial real estate, which is being crushed right now because basically what happened with office buildings and apartment buildings is that a lot of them got built in the previous 10 years and they were financed with extremely cheap money. And then the pandemic came along and a lot of people found out that they really like working from home and they don't want to go back to the office. So, and particularly with office buildings now, occupancy rates are way lower than they should be and way lower than they would be to make the building profitable. So you've got these buildings that aren't worth anything like the price at which they were financed. And so they're being sold or they're being refinanced. And in either case, big losses are going to have to be recognized. And somebody's going to take that hit. And for about half of it, it's going to be the local and regional banks. So what's going to happen is these small banks are going to report big losses in either their bond portfolio or their commercial real estate portfolio. That's going to spook their depositors who are going to pull their money out. That's going to force these small banks to pay off their depositors, but to get that money, they have to sell some of those depreciated assets and turn those notional losses into real losses. That's going to spook their depositors even further, and so on until, one bank tanks and it scares all the depositors of the other banks and so on until you get a industry-wide crash. And the government is going to have to step in and bail these banks out. Only it's going to be several $1 trillion. And, think about the environment in which that's going to happen. Gold and silver are already going up. Interest rates are already up. Inflation is already way above the bank's target rate. Deficits are $1.5 trillion to $2 trillion a year, which is a crisis level deficit already. And then you add an actual crisis into that mix. And people are going to be very spooked. And then the question becomes, how do markets react to this multifaceted crisis? I'm leaving geopolitics out of this. We could be in World War III at the same time, but leaving that out of it for a second. There's a decent chance that the pressure moves from asset prices over to the currency. In other words, people don't want to hold a currency that is obviously going to have to be inflated away in order to bail all these crashing financial institutions out. And then what happens? And, the answer is, who knows? This is a multi-pronged crisis that can go in a lot of different directions. And all we know for sure is that there's a crisis coming. We don't know about the details.
Right. And that saying is, may you live in interesting times. I guess here we are.
These are fascinating times from the point of view of an economics nerd, we're living through history. But in a very unpleasant history for most people.
Right. So you mentioned the metals, gold and silver on the move. And let's talk about that. I mean, we really gold's been on the move really for several months or a few months. Silver's just really broken out of a range here. And it could be, I guess, the market sniffing out everything that you just mentioned on what we're talking about. But are there other indicators? Because I watch gold and silver, the futures market, that was my background. And again, that's a paper market. I get it. And that's a different conversation. But I bring that up. It just seems like there's some really strong buyers, really strong hands that are buying up or moving that market, if you would. So what are the other factors that are moving it in light of what we just talked about? I mean, I've heard perhaps there might be an arbitrage going on with China. I talked about Andy Schekman about that. What are your thoughts on that?
Well, the kind of the meta explanation for what's happening with gold right now is that it should be $5,000 to $10,000 an ounce, given all the mistakes we've made. And if it's heading in that direction, it's just doing what it should have all along, So we don't even really have to think about it beyond that. It's just going to its intrinsic price, which assets always eventually do one way or another. But in the moment, there's a lot of stuff that's happening. And like you said, the central banks are buying gold like crazy. All of a sudden, they've gone from massive net sellers where they had to put rules on sales that limited how much a central bank could dump in a given year because they were afraid central banks were going to dump so much gold that it would crash the price. And now the opposite is kind of the case where they've gone from net sellers to aggressive net buyers. The central banks have bought 1,000 tons of gold in each of the last 2 years, which is a lot in a market where the world's mines produce maybe 4,000 tons. So it's a huge chunk of the market for new buyers to come in and claim. And that alone is enough to send the price of gold higher. And then you've got all kinds of other things going on. As you mentioned, the Shanghai Gold Exchange is mainly a physical exchange, and it's coming to dominate the gold market in terms of pricing. Whereas the paper markets, where futures contracts used to be traded or are traded, they were the force that used to control the price of gold, and it was in their interest maybe to depress it somewhat. Well, now the physical market in Shanghai is seeing gold premiums. In other words, gold is more expensive in Shanghai than it is in London. So that creates an arbitrage where you buy it in London, sell it in Shanghai. And in the process, gold moves from west to east. So then the question becomes, how much leftover gold is there for us to keep doing this? Because the Eastern central banks are already buying that 1,000 tons a year. And if there's a private market arbitrage that's sending a lot more gold east, what does that mean? And we don't really know exactly how much available gold there is out there. But, in principle, or in part, because we don't know how much gold the U.S. really has, they won't allow audits of their gold stash. So we just don't know. They might have already sold it all, or they might have more than they claim. We just don't know. But reasonably, at some point, the market gets tighter and tighter as these flows continue. And that leads to a higher price. And that's part of what we're seeing now, too, I think, where we're seeing strong buying leading to higher prices. And we're also seeing, other people come in. Have you seen the Costco thing? That is an interesting story. Yeah. But I was just at Costco the other day, and they have a flyer for their gold bars slapped up on the cash register kiosk thing, where it shows you what you're spending. There's a one-page printout of their gold bar offerings. I guess that you can do an impulse buy as you check out and just happen to put, $2,000 gold bar on your credit card as you're leaving. And apparently enough people are doing that the sales are somewhere around $200 million a month, which is $2.4 billion a year. Or wait, $200 million a month and $2.4 billion a year just from one big box retailer.
Yeah. That is crazy to me.
Mm-hmm.
Interesting. And I welcome that, but I guess, again, it goes back to the signs of the times. Yes, I live in interesting times. Do you see this slowing down much, or do you see gold and silver accelerating, I guess, as things continue to become more chaotic, if you would?
Well, this market has to head towards its intrinsic price at some point, which is $5,000 to $10,000 now. So yeah, I see it continuing, but irregularly. There are going to be big corrections. Bull markets don't move in one direction continuously. And there's an element of cyclicality to precious metals in the sense that when there's a recession and the attendant equities bear market, precious metals tend to get sucked down along with equities. That happened in 2008 and it happened in 2020. Both times, gold and silver made a V bottom and just took off at that point because the Fed stepped in and started easing against the equities bear market. And that reliquefied the markets. A lot of that flowed into gold and silver, and they just rocketed. So um, something like that is completely possible. You saw what happened today in the equities markets, where inflation came in hot, interest rates spiked, and stock prices tanked, and gold and silver both went down along with
Right.
equities. So that could happen on a much bigger scale over the next year because we're really due for a recession and an equities bear market anyhow. Just technically, that should happen soon. Let interest rates stay high, or God forbid, from an equity standpoint, go higher from here, and we'll see a serious bear market in equities because um, they're wildly overvalued. We just had a tech bubble here,
Right.
on top of everything else, we had a 1990s style tech bubble in artificial intelligence, which pulled up a lot of other tech stocks. And they're still wildly overvalued, so they could just tag here. And in the normal course of things, it wouldn't have to be anything extraordinary. They're just way overvalued right now, and the leadership is very thin. There's like 10 stocks holding up the entire edifice of the U.S. equity markets. So if that happened, gold and silver would get sucked down. We'd see a flash crash in precious metals. But then the Fed would step back in, because they that would be their excuse to ease, right? If equities
Right.
tank,
Yeah.
and then you want to own all the gold and silver that's
Buy.
available.
Buy.
Oh yeah, you want to mortgage. Wait, I started to say you want to mortgage your house, but I'm not going to say that in public, like it's a recommendation. But people will look back on it and think, I should have mortgaged my house. I should have sold my kids. I should have done whatever I had to do to get money.
Get money to get gold.
Yeah,
Gold.
yeah, yeah. So that day might be coming, and we just have to try
Wait
to
and see.
guess where that is in the
Yeah.
process.
Another interesting story that's happening as this is going on. Again, it's like you have this huge, if you think of it as a clock, if you would, or just this huge machine with all these different parts going on, and a part shoots off here or whatever. One of those moving parts is just what's going on in the energy markets. It's everything from obviously conflict, and I don't want conflict, and I'm sure you don't want either, but yeah, you have a lot of conflict going on in Russia and the Middle East, which directly impacts oil, if you would. And you also have oil. OPEC, they've tightened significantly over the past, I want to say 9 months since, 12 months. And oil is really starting to making a run here on that. Let's talk about energy here. And then you had uranium, which was crazy too. Well, it's funny because had a guest on when I started this whole thing last June, and we were like, yeah, uranium should be so much higher. And that was really the bottom. And who knew? We got lucky and he timed it. But yeah, I'd own these stocks because uranium's going to easily double from here. Because we're trading around $40 at the time. And now it's, just south of 100, I want to say. So yeah, let's talk about energy here. Where do you see our needs coming from, or how much of this do we need? Do you see oil slowing down? If you would. And what are your thoughts on all of that?
Well, there are two unrelated macro stories with energy right now. One is geopolitical, like Israel killed an Iranian general by bombing some part of of one of their embassies, which is a really big deal. And as we're speaking right now, Iran is apparently preparing their response. We don't know what it's going to be, but it could inflame the Middle East, which could interrupt the supply of oil around the world, which could send oil prices to $200 a barrel. That could be happening regardless of what the macroeconomic outlook is, right? Now, at the
Right.
same time, we've got the emergence of artificial intelligence, which 2 years ago really didn't exist in any fundamental way. And now all of a sudden, that's the big driver for energy use going forward. They're going to need server farms on a scale that even Google didn't need in the past, and even Bitcoin doesn't need today. And the amount of electricity that's going to be required to run those server farms to manage, AI spreading all around the world is going to be immense. They're talking about 1 year's worth of NVIDIA chips needing as much electricity as Ireland does.
It's
And
great.
that's just ongoing. And we don't have that kind of electricity capacity right now. So somehow we have to get it, which means, and this whole, oh, we're not going to use this energy source because it does this or that, that's going to go out the window. We're going to use any energy source we can get a hold of.
Right.
And that means natural gas is going to be very interesting going forward because we have tons of it in the US. We're just burning it off, and we could. Doomberg has a really interesting thesis about the oil market, and that is that we can now turn natural gas into a lot of petrochemical products that oil is now used to make. So you need to count natural gas as part of your oil reserves and your oil production, and if you do that, the U.S. is making insane amounts of oil right now. We just have more oil than we know what to do with. And that means that macroeconomically speaking, maybe the price is going to be restrained by all that extra natural gas taking share from oil in some aspect. But we're going to need a ton of energy going forward. Now, that's okay for oil, great for gas, and phenomenal for uranium. Because nuclear power, I think silver and uranium are probably the two best setups I've ever seen in the 40 years or so that I've been paying attention now. And the setup for uranium is that after Fukushima, a lot of countries decided they just didn't want anything to do with nuclear power going forward, and they closed down existing plants, and the ones that were in the pipeline got canceled, and the amount of nuclear power in the world went down, and the demand for uranium went down, and uranium's price went down. And now everybody's changed their mind. They're all going back to nuclear power because it has some extreme advantages that no other power source has. Uranium is incredibly energy dense,
Right.
and you can generate baseload power for decades on a very small amount of uranium, and it's super reliable. Um, makes zero carbon, so it's clean from the standpoint of the global warming issue.
Yep.
And there's plenty of uranium in the world. You can envision a world powered by uranium for the next 100 years with no shortages, at least no long-term shortages. But the really interesting part of the uranium story is that there are short-term shortages right now. There's not nearly enough uranium being produced in today's mines to satisfy the projected demand 10 years out.
Right.
So utilities and other companies that are operating today's and tomorrow's nuclear plants are looking at long-term contracts where they lock in the uranium they're going to need for 5 or 10 years. That does two things for the uranium miners. First of all, it increases demand and increases prices. Second of all, it locks prices in. So unlike, an oil well or a natural gas well or a coal mine or something like that, you kind of have a pretty good idea with a lot of these uranium miners what their cash flow is going to look like for half a decade or something. So that kind of stability allows for very cheap financing,
Right.
which makes these things even more valuable. And so if you've got a legit uranium mine in a good jurisdiction, it's going to be a license to print money going forward. And so you want to own the uranium miners that can say that they've got the goods, they're in a safe place where there won't be a coup or a nuclear war or anything anytime soon. And based on that outlook, they're still very undervalued today. They're still very cheap. They could double or triple from here easily and still be fairly valued.
Yeah, I've had a few trusted analysts on that have said something very, very similar. They said that the safest plays that they know of are three things actually. Uranium, number one, because if we don't produce or the price doesn't go up, the lights go out. That's what somebody told me. Yeah, it's not a trusted source told me. The second is silver. It's such in demand. And then you have everything going on with the utility of it as an industrial metal as well as a precious metal. So it just has a lot going for it as well. And then the third one, and I want you to comment about this, is copper of all things. And it just came out recently. I want to say in the last day or two. And I had another guest on a week ago. He said, Andy, the copper shortage is happening right now. And literally 2 days later, I read, I think it was a Bank of America analyst came out and said the same thing. We're short of copper. What are your thoughts on copper?
Yeah, copper is another phenomenal story. It has one flaw that I think silver and uranium might not have to the same extent, but it's a relatively minor flaw, and there's a way around it. But basically, yeah, all these server farms that are being created right now for AI require copper for their creation, and then that electricity has to be shipped somewhere, right? It doesn't just sit there at the server farm. So you need copper wiring for that, and we don't have anything like the amount of copper that is going to be needed for this rollout. So therefore, copper demand exceeds supply. The price has to go up to incent new copper mines to be built. And it takes a really long time to build new copper mines. So it's not going to be fixed overnight or even over a decade. So this is a very long-term shortage that we're looking at, which implies higher prices going forward. So again, if you've got a really high quality copper mine in a safe jurisdiction, you've got a license to print money. Now with copper, the geopolitical thing is a little bit scarier because copper mines are huge.
Right.
And if you saw what happened with the Cobre Panama mine just lately, it was one of the world's biggest copper mines, but there were so many protests of its environmental impact that the Panamanian government just closed that mine down. Meanwhile, in Mexico, you've got the president there talking about a ban on open pit mining, which would affect copper mining too. So you need to be really careful about how you bet on copper in a world where the mines are at risk in this way. And I would say there's a vehicle out there for that. Or actually, it's not the perfect vehicle, because the perfect vehicle would be a physical metal ETF, right? Where somebody just
Right.
buys a trillion pounds of copper and puts it in a warehouse somewhere, and then let the price go up. You got your copper in a warehouse. They don't have one of those for copper. They have them for silver and gold and uranium, which I think might be the best way to play those metals, because it eliminates all the other risks. But there are some, and this isn't a perfect thing either. So the copper mines are still probably the best play, but you got to choose very wisely. But there are also some royalty streaming companies that are starting to ease their way into copper contracts, copper royalties and streams. And I think they're able to diversify by doing a lot of streaming deals. And so that's the advantage of the royalty model, is that you end up with a lot of different deals in a lot of different places, and that minimizes the geopolitical risk. So the royalty streaming companies that have some copper are also they're worth looking at, because they're already in gold and silver, which is great. I mean, you could buy them just because of the gold and silver and be really happy with them. But to the extent that they're getting into copper as well, that is an added interest. You wouldn't think that would be the exciting part of a precious metals royalty streaming company, but in some cases it is.
I'm glad you brought that up. I actually own some royalty companies in gold and silver. I love them. I love the model.
Great
And
business model. Yeah.
yeah, it's fantastic. And I wasn't aware. Well, I was somewhat aware, but I don't have any in copper, but I think that'd be a very viable way to play it, because you are going to significantly minimize your risk in my mind. So that's great. I guess really I'd like to wrap up here. Land the plane with me is like, what advice would you have? Let's say somebody's new, they've been awakened, if you would, with what's going on financially, as well as what's politically, and they're becoming awakened with everything that we've talked. Where does that start? Because where does a person start? Because what I usually get, the questions where I usually get is like, Andy, I agree with you, or I see what you're saying. I am just overwhelmed and I don't know what to do, so I'm not going to do anything. So, yeah, what would your advice be to somebody that's seeking truth and want to protect themselves first and then potentially also make some money? What would you
Yeah,
do?
it is a daunting future because it's really complicated and it's probably really chaotic. That's how I would that's how I would define the decade that's coming. Very chaotic and very complicated, and that can be overwhelming. But what you want to do is two things. One is, or three things. First, recognize that you can't stop this from coming. The momentum out there is overwhelming, and we can vote for a person that we hope will do a better job of managing the chaos, but the chaos is coming. Okay, so that's thing number one. Just don't think you're going to be able to stop it by any kind of action or anything. The second thing is, treat it like an investment thesis. Okay, the world is getting chaos. It's chaotic. It's very dark. It's very scary. Don't let that crush you because it could easily. I spend a lot of my days focusing on the bad things that are going on out there, and it can be soul crushing. And it can be daunting and terrifying for somebody who doesn't find it fascinating at the same time, like an obsessive, like I do. Um, but if you start thinking of it as an investment thesis, like watch the movie The Big Short, where there was clearly a housing crisis coming, and some far-sighted money managers saw it coming and they placed big bets, and it didn't work out at first, but then it worked out and they made life-changing money. You know, think of the world that's coming as something like that, where it's possible to invest very successfully in a world that's chaotic because crisis equals opportunities. And we've got a lot of crises coming. So we have a lot of big opportunities too. And then think, what exactly would you do about these crises here? And I think the first thing to do is to start to simplify your financial life away from debt, away from financial assets like bank accounts and bank stocks and other financial assets, government bonds. Those are things that depend on the value of the currency or their value. You don't want to be anywhere near something like that. So you want to go for real stuff. So shift out of cash related things and into precious metals, which are kinds of money that governments can't make more of. Therefore, they will go up in a situation where the currency is being inflated away during a financial crisis. So start stacking, start buying some gold and silver coins. Very simple, very easy to do. You can do it at Costco now or Walmart online. I just bought some silver rounds at Walmart online, and it's as easy as buying anything else at Walmart. They just delivered them to my house 2 days later. You can start doing that. And you can start investing in the stock market to the extent that you want to have assets in brokerage houses, which, I have some. I'm worried about the great taking scenario and stuff like that. But I think that's a diversification. Once you get your bedrock physical gold and silver nailed down, look at investing in companies that own physical assets, like we talked about, energy companies, especially uranium, copper, and oil and gas, gold and silver mining companies, things like that, of the various forms. And in my Substack, I cover, which variations on the theme of gold miner might be the best thing to invest in, stuff like that. And then from there, start looking at the other things you should do to prepare your life for a chaotic decade. And that falls under the heading of prepping, this is mostly stuff we should have been doing anyhow. Have a garden out back so you're 20% food self-sufficient. Learn how to defend yourself. Own some guns. That offends a lot of people to hear me say that, but
Not me.
in the world to come, you need to be able to. There's a saying that if you can't defend your rights, you have no rights. And that's very true in chaotic times. So stuff like that. Embed yourself in your community. So it's not just you alone, make friends with people who can have your back. And then you have their back and you're part of a community and you're much stronger as a group than you are as an individual. So these are all things you can do. They're all things we should have been doing all along. And even if the world stays placid and understandable going forward, you're a happier person if you've done these things, because this is the way we should all be living our lives in any event, So it's one of those things where, you have a heart attack, but you survive and it scares you into behaving like you should have been behaving all along. So it turns out to be a good thing. This is like that.
Yeah. Excellent, John. Huge fan. I'm a huge fan, and I love your blog. Go ahead and give your how people can reach out to you if they want to know more about you and your work.
Yeah, I'm at rubino.substack.com, and I have a newsletter there where we talk about the stuff that you and I just talked about, and the solutions. What you can do about all this stuff to survive and thrive in a chaotic decade.
Yeah, excellent. I'll put all of that in the show notes. Thank you so much, John. I really appreciate your time, and I've been a big fan, and it's great to finally get the chance to talk with you.
Thanks, Andy. Enjoyed it.
Yeah, me too. Thank you.